Today we have gathered here for a study circle meeting on all about RCM under GST. And to dwell upon this subject, we have CA Praveen Kumar Gella. Can I request CA Manjunath Hegde sir to escort speaker onto dais and then welcome him with floral bouquet. Thank you, Manjunath sir. Thank you, sir. I have privilege in introducing today's speaker, CA Gella Praveen Kumar. CA Gella Praveen Kumar is a science graduate from Kakatiya University. He has done his BSc Electronics. He has completed MBA from Cochin University of Science and Technology. He has completed CMA and CA during 2008. He is a visiting faculty at ICMAI Bangalore chapter since 2010. He is associated with Board of Studies of ICAI for taking online classes for CA final year students on GST and customs law. He is into practice since 2010 under the trade name Gella & Co. With this brief introduction, I present before you CA Gella Praveen Kumar sir. Over to you, sir.
Good evening, everyone. I thank Chairman Divya, I thank the Secretary Manjunath sir for giving this opportunity to talk on today's topic, the reverse charge mechanism on GST. So today's topic will have more of interactive on practical aspects. What is there in theory, every one of us have studied. If not studied, Shoka's notice would have taught us what all aspects, what all gimmicks were there, how to interpret the law, what aspects are there. So today's session, this is the overall coverage what we will have to understand. I'll touch upon the basic provisions. As a custom, as a tradition, we will try to touch upon to read the basic provisions once, how it will affect our thought process. Instead of reading what is there on the wall, we will read in between the lines to understand how it could be interpreted for the litigation purpose. Also, I will take you through the ancillary allied provisions. When we talk about reverse charge mechanism, what provisions have to be read in consonance with my reverse charge mechanism. I'll also take you through a couple of defense mechanisms. Whenever a Shoka's notice comes, whenever a demand comes, always we approach to the officer, say GST, why we have to pay, we have sufficient balance in electronic credit ledger and all. So there are a few aspects which we will try to have a familiar understanding whether this defense can be put forth before the department authorities. Last couple of practical issues what we have in terms of implementing these particular provisions also we will try to understand. This is an overall coverage for the next span of 2 years we are going to have. Anything I have missed out in this coverage, feel free to let me know. I'll touch upon any issues whichever you come across where you need little more clarity for discussion point of view. Starting point, Constitution, Article 246A. Prior to this GST amendment bill, not one constitutional amendment, we had this Article 246 which gives the power to collect taxes. So in India, any revenue or any tax demand, it gets power from Constitution of India. For GST, Article 246A is a root canal where we have these GST provisions which come into picture. Now here we have two kinds of demand. One is intrastate supply, one is interstate supply. Law relating to or regulations in relation to interstate supply will be regulated by Parliament. Laws in relation to intrastate will be regulated by the respective state legislative assembly. Article 279A, which talks about GST Council. When I say GST Council, we have this guiding factor. Like we have the Institute of Chartered Accountants of India, we have guidance note, we have this accounting standards and all. So we have these rules and regulations formulated by ICA for the purpose of conducting our audit. In similar fashion for our GST, we have GST Council which gives a direction with respect to registration threshold, with respect to interpretation of few taxation principles, or with respect to any of dispute between state and center. So Article 279A, which was referred in Bharati Airtel case, we had this Bharati Airtel Supreme Court judgment where this particular entity had approached Supreme Court saying that, look, we have to avail input tax credit, but we have been waiting for GST 2A, where GST 2A was not in picture. Whatever credit was there, we have taken. We have paid more tax through cash ledger. Kindly allow us to rectify our return. That point in time, in this particular Supreme Court judgment, there was an exhaustive discussion. What is the authority vested to a GST council? What is the role of a particular council? And what is the responsibility of the states and the parliament and legislative assembly with respect to the recommendations made by the GST council? It meant to say, it is not mandatory that whatever council has given a directive, you have to adopt. There is a recommendation made, you have to examine, and then you have to adopt to the suitable requirement. For a moment, GST on petrol and diesel. As on today, we all know that it is out of GST purview. GST Council has an authority to make a recommendation at a point in time when this petrol and diesel should be brought under the purview of GST. So whenever a recommendation is made, it is a responsibility of the Parliament to take a decision on the basis of those recommendations. 269A, Article 269A, which is one of the cardinal principle in Mohit Minerals case, where all of us would have studied this Supreme Court judgment in case of Mohit Minerals, where GST was demanded on reverse charge basis on this import of service called freight payment. Whenever there is an ocean freight, on ocean freight, there was a demand of GST on reverse charge basis, where this particular assessee had said, look, when I import the consignment on CAF basis, there is section 4 under customs law. Based on section 4, I have been assessed for payment of customs duty. Again, by virtue of notification 10 of 2017, you are making me, that is an importer, to pay tax on reverse charge basis. Where this Article 269 was discussed at length with respect to your provisions connected with interstate supply. So whenever there is an interstate supply, we know place of provisions. This place of supply, the place of supply has been brought into picture where they say any aspect where interstate supply comes into picture. The Parliament has only authority to frame regulations. None of the states have authority to frame regulations in relation to place of supply provisions. So one of the important aspects is your place of supply. These are the three basic articles which we need to read as a prima facie to understand what is the law, how it is going to help me for my defense purpose. Now when we read this particular judgments, we understand how this defense was taken for argument purpose. And now I'll touch upon this defense as and when we come across particular topic. To start with, levy, where my levy is created under section 9 read with section 5. I'll give one example in relation to a particular trust which was there in Mumbai. By Trust versus Suchitra, which is a Mumbai High Court judgment, where there was a dispute between landlord and tenant. There was a unofficial, illegitimate possession by a tenant where this particular landlord has approached the court. Court have given a direction to appoint an officer, supervising officer, who is called as a tribunal member. We know that tribunals, like whenever there is a dispute, not all the cases will travel to court, or at times because of paucity of jurisdictional issues or whatever may be, a tribunal is formulated where tribunal takes care of these matters, which is for dispute or settlement. In this particular case, the tribunal appointed supervising officer have given an award saying that so and so tenant has occupied your property. Because he or she has occupied your property, there is a compensation which is towards damage, which is illegitimate occupation. Example, say 2010, someone has occupied a property, they try to evacuate the tenant. Tenant says, no, I'm not going to evacuate because we have an agreement that there is a lock-in period of 10 years. Now landlord says, no, this is not renewed upon, which is not a tenable thing. But like no, always tenants like Mumbai, you can see these kind of illegitimate position. They'll say, look, I'm aged more than 60 years. I don't know where to find. My business is getting affected. I have been there for more than 10 years. A lot of practical issues will be there where tenants don't get vacated from the premises. So here, this judge, the tribunal member who is the supervising officer, he was trying to calculate something called damages. Whenever there is a dispute, landlord says, sir, I have been suffered, like I have to give this property to someone, this is a market price, you have to pay so much of rupees as a tenancy or rental. Now when the calculation was done, what they have done, 2010 till 2015, 5 years the case went on for dispute. What they have done, what was the market value at that point in time, that was calculated and the award was sanctioned. Now the GST or the service tax authorities come and play their role. What they say, look, there was an award given. What basis the award was given? There was a market rate available. This was taken into picture. Per month, say 5 lakh rupees. 12 months, 12 into 5, say 60. Into 5 years, 300. This is how the damage or the compensation was calculated. Now here, when we look at levy, there was one circular in August 2022, circular number 178, where liquidated damages was touched upon. That particular concept was brought in here in this Bai Mumbai versus Suchitra case, where they say, because there was an award, because there was a compensation, because of an illegitimate possession by a tenant, I cannot call that as a supply. I cannot call that as a consideration. When supply doesn't come into picture, where is the question of GST? So here, just because I have received money, just because there is a compensation received, just because there is a yardstick for calculating this particular damage or compensation, it doesn't mean that there is a supply. For each and everything, like when we look into the profit and loss account, whatever gets recorded on the credit side of P&L account, I cannot call that as an income which construed as a supply under GST law. So the starting point here is section 9, section 5. Section 9 under CGST law, section 5 under IGST law. So first and foremost, what we have to do, we have to examine the nature of transaction. This transaction, can it be construed as a supply for the purpose of levy of GST? If it doesn't fit into the levy, where is the question of payment of GST? This is where our defense starts. So starting point here, whenever we talk about reverse charge mechanism, demand may be there saying that this is an expense on which you have to pay tax. This is an income on which you are supposed to pay GST. So here, whenever they refer to this particular allegation, there is a reference, like one more example I'll give. There is something called mense profit. Mense profit is a reference to illegitimate possession of a property. Tenant was there, I have been trying all my means to vacate, tenant was not vacating. I go into court of law for dispute settlement. This dispute settlement may happen in the court, may happen outside the court. Whenever there is a settlement where a consideration is paid, I cannot call that as a consideration. Similarly, when I pay to the government for damages, like liquidated damages, so I have to supply some particular goods to FCA, which is a government undertaking. So there is a OT crane, there is a overhead crane which has to be supplied and installed in FCA godown. As per the agreement, within 10 months from the date of order, I have to make a supply. The cost of this crane is worth say 25 lakhs. I delayed in supply by 1 month, where my payment was reduced by 2.5 lakhs. Now when I have to book this particular expenses as 2.5 lakhs in my books of accounts, can there be a demand of reverse charge? Can there be a demand of GST? Is what we are trying to evaluate. Just because something has come into P&L, maybe on the expense side, maybe on the income side, it doesn't mean it is subjected to GST. So we have to evaluate, we have to examine whether the conditions of section 7, which deals with supply, read with section 9 under CGST Act is satisfied or not. So these are two examples which we have to understand that before even deciding that I have to pay tax, whether supply comes into picture. Just because money is there, consideration is not to be taken for granted. There's one Supreme Court judgment which is very, very famous, and most of recent demands by the Karnataka state GST officers is being defended using this particular Supreme Court judgment called Gobind Saran Ganga Saran. I'll give an example for this particular demand which is being made. Investment by the parent company in a subsidiary company. Say there is a parent company in US. This particular company has invested money in Indian entity by way of equity. Now the department started raising a demand saying that this money which has received for the purpose of equity by way of share capital, they say it is a supply, it is an import of service where it is for financial assets. Based on the financial instrument or financial services, they have been demanding GST on that particular share capital. What they are doing, if the share capital is say for 10 lakh shares, what they are doing is they are calculating EPS. Whatever earning per share is there, that multiplied by number of shares, you will get some amount. On that 18% is what they are trying to calculate for the purpose of payment of GST. So here the whole argument from the department is, look, there is a share capital. On share capital, we presume that you have received service. What is that? Financial services. On this services, there is a yardstick. How they have calculated? Earning per share is there. This earning per share, I will multiply with the number of shares. If you get profit, pay 18% GST. So what happens if I have a loss? Will you give a refund of GST? Answer is no. Because you are making a profit, there is a demand which is being created. In that particular case, we are coming to defend our demand, saying that first and foremost, when you say it is a activity which is subjected to GST, show me where is a taxable event. When I say taxable event, the activity itself should have been subjected to GST. Now, investment in securities, investment in equity, I call that as security. Reference to the term securities under the Companies Act. Any money invested in stocks and shares or debentures will be considered as your equity. So, the reference to this particular money invested in equity is called as a security under your Companies Act. That particular definition, when I refer to the GST law, what you are demanding tax is on security. Securities are neither goods nor services. When securities are neither goods nor services, where is the question for payment of GST? Reference to schedule number 3. So here, first and foremost, we have to see whenever there is a demand made, was that event coming under schedule number 3. Now in CGST law, we have 3 schedules. Schedule number 1, where there is a supply without consideration. Like stock transfer. From one branch, I make a stock transfer to another branch. Though there is no consideration, I consider that as a supply. Transaction, gifts given to employee more than a particular threshold limit will be considered as a supply. Schedule number 2, when a supply has been met under section 7, I classify that particular supply either as goods or services. Schedule number 3, which is neither considered as goods nor services. Now when you talk about securities, first element we were trying to define is, so when securities is something which is covered under schedule 3. It is neither supply of goods nor supply of services. Second point, person on whom levy is imposed. Where is the provision under GST law where you look into forward charge, you look into reverse charge, where the person, the recipient, that is a subsidiary company in India, was made responsible for payment of tax on reverse charge. I come to a couple of schedules. Note your entry for goods, entry for services, where we will try to understand where this person was referred in relation to this particular service. Third aspect, rate at which levy is imposed. Whenever there is a demand, this particular Supreme Court judgment says, please give a guidance what is the rate on this particular supply at which the tax has to be paid. Now when I look at this particular transaction, we have schedule number 1, we have schedule number, notification number 1, notification number 11. Notification 1 talks about for goods, notification 11 talks about for services. Now when I look into this particular notification 11 of 2017, where is the entry and what is the rate specified? Last but not least, what is the measure or value to which this particular GST rate has to be applied? Now, this particular example which I have given, import of service, investment of a foreign company in a subsidiary company where GST is being demanded. The fourth element we were trying to argue is where under GST law you have been given a rule or a section which explains that this is how you calculate the supply value. Like most of these cases, what they were trying to do is when the money is invested, it will be in foreign currency. we convert that foreign currency to INR and then we get into recording in the books of accounts. One another example is your external commercial borrowings, ECB. When I borrow money in foreign currency, by force, there was an application of valuation rule number 32. Rule number 32 gives various 7 activities how we determine the rate or value for supply. Under rule number 32, there was something called conversion of money, INR into foreign currency or foreign currency into INR. So here, the Karnataka state government, what they were trying to do, they were trying to apply this rule 32. See, you borrowed money in foreign currency. They are saying that applying rule 32, this foreign currency I'll convert into INR, that is 1% of your foreign currency value. Whatever foreign currency you convert into INR, on that 1% happens to be my transaction value. On that transaction value, 18% GST is being demanded. Now all this is a artificial, all this is an arbitrary demand which is being created by the department. So here, whenever the department is making a demand, my point is, don't blindly take for granted that this tax has to be paid. Examine these 4 elements. Does the law identify what is a taxable event? If the taxable event is identified, person who has to pay that particular tax. Once the person is identified, identify the rate at which this tax needs to be paid. Third, when you know the rate of tax, on what value this particular rate has to apply. These 4 are the pillars which we need to test for payment of taxes. So this reverse charge, wherever you have a foreign company or a company which has an investment from overseas, these 4 principles we have to use as a defense, saying that, so these 4 milestones you are not explained in your demand, whereby levy itself is a failure. This is how we have to make a difference. Moving further. When I spoke about your levy, section 9 under CGST law, section 5 under IGST law. This is a drafting, keeping in mind all my GST, prior to GST, Central Excise Service Tax, VAT, whatever provisions, whatever disputes we had, all of them have been duly addressed in this particular GST law. So just to read my section 5, it says, there will be levy of IGST on all interstate supplies. IGST on all interstate supplies of goods or services or both. So first and foremost, there should be an interstate supply. When there is an interstate supply, IGST comes into picture. When there is no interstate supply, IGST will not come into picture. So how do we know it is an interstate supply? For that we have to refer to section 7 of IGST law, where section 7 of your IGST law says that identify the supplier, identify the place of supply. The supplier should be in one state, the place of supply should be in another state. When these 2 conditions are satisfied, then I count that as an interstate supply. I was referring to Mohit Minerals case, where there is a seller overseas. I'll give one example to make this very clear. So there is a seller called ABC GmbH, ABC Inc. This seller is in US. The seller has taken a responsibility of transportation of goods till Indian customs port. I am an importer in Bangalore. What I have said to my seller, look, when you are supplying the goods, till the goods reach the ice gate, Whitefield, Bangalore customs, it is your responsibility. So this particular seller who is in US, this fellow has approached one transporter called XYZ Freight Forwarders. This XYZ Freight Forwarders pick the material from US, they have taken by ocean, it has come till my Whitefield customs. So whatever transportation has taken place, this is a service given by XYZ to this particular seller called ABC Inc. Now here, can this be called as an interstate supply? There is a seller. Who is the seller? ABC Inc. Where is he? He is in US. Who is the service provider? XYZ Freight Forwarders. Where are they? They are also outside India. Service rendered to a seller outside India, that cannot be called as a interstate supply. Just because I am an importer, I am a manufacturer in Penia, just because I am an importer, for that service I cannot be held to be a importer. So here when I refer to this particular definition, interstate supply, was there a supply? This is a prima facie question which we have to take into consideration. Why? Wherever there is a demand which is going to come, this is the starting point where we have to put our counter arguments. Prove that this is a supply. Now, when we say input tax credit, the burden of proof of input tax credit is on assessee. Similarly, whenever there is a demand, the officer who is going to raise the demand, it is his responsibility to prove that there is a supply. Only when the officer can establish that there is a supply, then I go to the further argument that tax ought to be paid but not paid. They say 5.1 says there shall be a IGST in all interstate supplies of goods or services as per the value determined under section 15. So they say whenever there is a levy of IGST, it will be levied on a value as per provisions of section 15 at such rates not exceeding 40%. So they have recommended that there should be a rate which shall not exceed 40%, shall be paid by the taxable person. Here they have used a term called taxable person. This term taxable person is one of the key dispute or key argument in this Mohit Minerals case. When you read this particular Supreme Court judgment, every word, every phrase in your provision gives a weightage for your argument purpose. So here when I talk about levy, section 9 CGST law, section 5 IGST law, they have referred to a term called taxable person. Who is a taxable person? Person who is already registered, or person ought to be registered under section 24. Person who is registered, if I have taken a registration, I will be called as a taxable person. Person ought to be registered under section 24. Section 24 CGST law, if you see, there is a compulsory registration. If I make an interstate supply, if I export services, or if I am supplying goods or services to e-commerce operator, if I am a person to deduct TDS under section 51 or deduct TCs under section 51, there are 8 lists of category where I am supposed to take compulsory registration. I should be falling under section 24 where I ought to take a registration, or I should have been registered under GST law. Then this particular provision is applicable. Question comes here. Sir, I am never satisfied with the provisions of section 24, or nor I have taken a registration. Then this particular levy itself is a failure. So my point here is, whenever there is a dispute, whenever there is a demand from the department, be very specific. So you tell me under which provision this demand is being created. For ease, they will say demand as per levy as per section 9 has not been paid. Interest under section 50 was not paid. Now when they say department, or like these days if you see this showcase notices, they will say interest under section 50 was not paid. Now we need to ask the officer, sir, section 50, when you are asking for interest, there are 2 subsections. 50 subsection 1 talks about non-payment of tax. 50 subsection 3 talks about availment of input tax credit and utilized erroneously. Now there are 2 categories under which interest can be demanded. Now officer should be very clear in his mind under what particular section this particular charge or demand is being created. So first and foremost, whenever we get a notice, let's look at the provisions. Was the demand created under 5 subsection 1, 5 subsection 3, 9 subsection 1 or 9 subsection 3? When it was created in 9 subsection 1, was it referring to taxable person? Have they called out for a taxable person? Like most of the cases, agriculturist. You might have this agriculturist whose income is exempted. Person who is dealing with rice and paddy. All along I have been dealing with purchase and sale of rice. Branded rice, unbranded rice. Day 1 of my GST came into picture, I was dealing only with unbranded rice. So where is the question of payment of GST? Now there, officers will call for your 26 days. I could have my income from mutual funds, I could have interest income from fixed deposits. Some reason the officer gets to know that you have turnover of 2 crore, you are not registered under GST law. Now he will call for information. When he looks at your P&L account, there will be one head of expense called freight charges, transportation charges. The moment he says transportation charges, he will say, look, you have to pay tax under reverse charge, but you are not paid. Now you should very carefully look into the demand. Was that demand created under 5.1? Was that created under 5.3? First and foremost, there should be an entry for 5.1 where a taxable person should have been brought into picture. I was not a taxable person. Section 24 doesn't cover me. Section 22 also doesn't cover me. There itself is a difference where you put across the officer concern. So this is how read in between the lines for the allegations what they are making. Moving on, this is the cardinal principle where my demand comes. Section 5, subsection 3. Section 9, subsection 3. I am using these provisions wherever there is overlapping, I am skipping. Wherever it's a common provision, I am just sticking on to that. Reverse charge triggering point is 5 subsection 3. Similarly under GST law, 9 subsection 3. It says government may by notification specify categories of supply of goods or services or both, the tax on which shall be paid on reverse charge. by the recipient of such goods or services or both, where a deeming fiction was created for applicability of all provisions under this Act, IGST Act, CGST Act. So this particular levy, in simple terms, it says to pay tax on reverse charge. To pay tax on reverse charge. What is the levy says? There should be a categories of supply of goods or services. This term category where we are referring, categories of supply of goods or services. This is my starting point. When I look into this reverse charge notification, notification number 13 of 2017 Central GST Law, notification 10 of 2017 and by IGST Law. I'll come to the detailed list in a while, where there should be a category which has been specified. If the services which is accounted in my P&L doesn't fit into this category, I need not pay tax under reverse charge mechanism. What they say? Category of supply of goods or services are both, tax on which shall be paid on reverse charge basis. On reverse charge basis. Now, this is the reverse charge mechanism 5.3 which was talking about. Now, remember that particular first slide, Gobind Saran, Ganga Saran. In Gobind Saran and Ganga Saran, there are 4 limbs for a demand of tax. There should be a taxable event. Here, my categories of supply of goods or services is something which they are referring to as a taxable event. There should be a person identified. Is the person identified? Recipient is the person identified. Tax on which shall be paid on reverse charge basis. That's all they just say. So when I say tax on that should be paid, I travel to my rate notification to identify what is my rate of tax. Again, valuation. On what value I should pay tax, there was no reference under 5.3. Again, section 15 under 5.1 is where I travel to find out what is my value of supply. Please remember, whenever department is making a demand, first and foremost we need to ask, so you have demanded tax ought to be paid but not paid. Please tell me where is the entry where the value of supply has been defined for this particular supply. Question the question. What always we do, when a question is posted to us, we try to start defending. You have written this, this is what I have understood, this is what this advanced ruling says, this is what the circular says. Always we try to go in defending our stand for the demand. Before even making your defense for the question, start questioning the question. You have framed a question. Was that question complete enough to frame the demand? That is where your defense starts for protecting the interest of the assessee. Now, when I talk about this particular entry, I'll just come to one particular PDF. Is the PDF visible? This is my visible, or shall I increase the size? Is this okay? So this is my notification 10 of 2017 integrated tax IGST. Look at the first entry. Category of supply of service, supplier of service, recipient of service. You remember that 5.3 where they say category of supply of services, goods or services, supply received by a recipient, tax to be paid on reverse charge. That's all they say. Now when I look at this entry number 1, any service supplied by any person who is located in non-taxable territory to any person other than non-taxable online recipient. They have used a language called non-taxable online recipient. This term non-taxable online recipient was defined in IGST law. What they say, any person who imports services other than for business or commerce, any authority which is a government authority, central government, state government or local authority, they will be called as this online non-taxable online recipient. Why? Government cannot demand tax from a individual. Say I am an individual, my son wanted to pursue some particular foreign language. So he wanted to learn some foreign language. I import particular license for learning, say, French. Now when I downloaded this license, I would have used my credit card or debit card for making remittance. Now will I be called as an importer for payment of tax under reverse charge? This term non-taxable online recipient comes and protects me. Because I have downloaded the software for my personal use, not for business or commerce, I will be called as a non-taxable online recipient. So here, the category, look at the category, any service supplied by any person who is located in a non-taxable territory. I'll give an example. Let's take a company XYZ Private Limited. This particular company have got their marketing executive or production engineer. One marketing engineer, one production engineer. These two people were sent to Europe for a particular training. They wanted to understand how a particular commodity or how a machinery functions. Sales guy should know what he has to sell. Production guy should know the technicalities of production. So two people have sent to Germany, and these two people have to stay in a particular hotel. I have given say $1,000 foreign currency, $1,000 or pounds for the purpose of accommodation. Now read this entry. Any service supplied by any person who is located in non-taxable territory. The hotel in Germany, is it there in non-taxable territory? Answer is yes. To any person other than non-taxable online recipient. To any person. Now person, income tax, your GST, across you have the same definition. Person includes individual, HU, BOP, AOP, AOI, all list is there. This particular company XYZ Private Limited falls into the definition called company. Now these two employees, when they travel to Germany, they will take the bill on the name of company, not in the individual capacity, because once they come back, they have to give their settlement claim. Now, service supplied by any person who is located in non-taxable territory to a person other than non-taxable online recipient. Isn't it satisfying the definition of this category? Service is given by the hotel fellow. To whom it was given? It was given to a person other than non-taxable online recipient. XYZ Private Limited, they are into business or commerce. They are not fitting into this definition called non-taxable online recipient. As on today, this definition says individual other than business or commerce. State government, central government, local authority. This entity XYZ Private Limited, is it not fitting into this particular definition? Into this category? Answer is yes. Look at the next column, column number 3. It says supplier of service. My supplier of service is a person located in non-taxable territory. The hotel, the owner of the hotel service provider is in Germany. Recipient of service, any person located in taxable territory other than non-taxable online recipient. Now what is happening here? By default, any expenses I have spent in foreign company, foreign nation, non-taxable territory, who is responsible to pay GST? Recipient. Now this entity, this case, XYZ Private Limited, is it not a recipient? So that means to say, all my foreign expenditure, all my travel and expenditure, money given to my employee on a foreign travel, doesn't it get into the clutches of my GST? So this is a damage of a provision which was brought in. Where I was referring to this, Categories of supply of goods and services are both. Look at the second line. Categories of supply of goods and services are both. Where reference to the term supply. When I refer to the term supply, IGST does not define. I have to come back to CGST law. Under CGST law, section 7 has defined what is a supply. There, section 7, subsection 1, clause B refers to import of service. Import of service again was defined under section 2, clause 11 of IGST Act, where they say, what is an import of service? There is a supplier of service in non-taxable territory. There is a recipient of service in taxable territory. So far so good. Third, the place of supply should be India. They say the place of supply should be India. Then it is called as an import of service. Now, when I have to get an answer for this, section 13 of my IGST Act gives a clarity, where they have given 13 subsections to identify how we have to get a clarity on place of supply. Fortunately, all these expenses which we spend, which we incur in foreign currency, does not have a affirmative answer under section 13. So if my place of supply is not India, I don't call that as an import of service. So just because money was spent, now when I look into this particular entry, this department will start insisting, look, there is an entry where you have to pay tax on reverse charge, where you have to explain them, sir, I do understand this entry, please read the definition called supply. In my definition, import of service was clearly mentioned, where service provider is outside India. Yes sir, this hotel service provider is in Germany. Recipient should be in India. Yes sir, XYZ Private Limited is in India. Third condition, Place of supply should be India. Just because place of supply is not India, in relation to immovable property, section 13, subsection 3 says, where that immovable property is located, that shall be your place of supply. So by virtue of that, Germany happens to be place of supply. For that reason, I don't call that as a import of service. When it is not import of service, what is the question of me in paying a tax under reverse charge? So this is a damaging interpretation where we don't understand word to word for the purpose of demand. Whenever there is a demand, this is how we read in between the lines, word to word, and say, sir, this is the failure where you cannot demand my tax. Now, this import of service, I have explained these three requirements, and also a term called taxable person. It means a person registered or liable to be registered under section 24. Registered already, nothing to worry. To be registered under section 24, then I call that as a taxable person. So why I have to refer to the term taxable person? When I look into 5.3, look at the red color. You can see the red color here by the recipient. In 5.1, there was a reference to taxable person. When it came to reverse charge, they have missed the term taxable person, but they have referred to a term called recipient. What is the importance of recipient? Was this term recipient defined? Again, answer is yes. When I look into section 2, clause 93 of CGST law, it says recipient when in relation to goods. The person who makes the payment, consideration, is called recipient. So what if no consideration is there? The person whom the position is given, he will be called as a recipient. In relation to services, the person who makes the payment, that person is called recipient. So what if services is given without consideration? To whom we are rendering services, that will be called as a recipient. So this term recipient is very, very important for the purpose of your interpretation. Intrastate supply, interstate supply. This is how the term recipient gets a importance. Now, similar to 5.3, now 5.3 talks about your interstate supply. 9.3 talks about your intrastate supply. CGST, SGST, IGST. 5.3 is in relation to IGST, 9.3 is in relation to CGST, SGST. They say there is a category of supply of goods or services. I'll just show you this. Now, this is a list where they have given a category of goods. Is this visible?
Yes.
Yeah. So they have given list of items. We'll come to this in a while. So wherever there is a category, now here also, this is my IGST. Wherever there is a category mentioned, for this category they are saying that there will be a levy of GST. On whom this GST is being levied? Supplier or recipient? This reverse charge is on whom? Service provider or recipient?
Recipient.
Recipient. Now question comes here. Sir, I don't know that recipient has to pay tax. Service provider, forward charge basis, he has collected tax from me. Classic example, renting of motor vehicle. So renting of motor vehicle is under reverse charge. All along my service provider was charging, I have been paying to you. Second example, your security. Supply of manpower services for security, it is under reverse charge. So I don't know it is under reverse charge. My service provider charged me GST, I paid the tax on forward charge basis. Now here, can I take a difference for that? Answer would be, who is responsible for that? As per 9.3, a specified category of goods or services, recipient is responsible. Now, let's take one example. Say there is a service provider, manpower security services. A to Z manpower security services. I am an individual. Praveen is an individual who is rendering this particular services. So when I render this particular service, A to Z manpower services, I have been charging GST. But I never paid this GST to government. I filed GST year 1, I filed for GST year 3B. GST year 1 I was showing one liability, 3B I was showing one other liability. Now this 1-3B comparison was brought in, section 75 subsection 12 was brought in, where there is a gap between your 1 and 3B, officer can block your filing of return. Till 2022 August, this mechanism was not there in picture. So I was a happy going service provider, I have been collecting but never paid the GST. Now, the company who have taken services from me, they get a show cause notice. Look, you have received security services. When you look into your P&L, there was a A to Z security service provider who happens to be individual. There was a levy of tax on reverse charge. you have to pay this tax on reverse charge. Then I'll go to the officer as a defense. Sir, ನೋಡಿ bill ಕೊಟ್ಟಿದ್ರು, bill ಮೇಲೆ service provider IGST, CGST, SGST ಅಂತ charge ಮಾಡಿದ್ರು. You're demanding tax again on this particular supply, Article 265. Authority to collect tax. Now always we take this defense, Article 265 saying that once a tax was levied, you cannot demand once again the same tax. Now they primarily who is responsible for the tax? Recipient. Is it service provider? Answer is no. They as a recipient have to prove to the satisfaction of the officer. What is that they have to prove? Tax on that supply was paid. If tax on that supply was paid, then Article 265 will come into your rescue. How do you prove? So look at his one, look at his 3B. He has filed one for X amount, 3B is also showing X amount. If he has filed GST for X amount, 50% of that X was shown in 3B. How can I say he has paid the tax? Primary responsibility is on me under 9.3 or under 5.3. If I have not paid tax, if my service provider has charged, I am responsible to prove that the tax was paid. If the tax was paid, then you take a defense of this Article 265. Yes sir, it was paid. Instead of me paying, this fellow has paid. Then the demand can be drawn. Next, 9.4. Anyone dealing with construction clients here? Construction related activity? Accounting for reverse charge of this construction projects? No one? Okay, good. This itself will take minimum 15 to 20 minutes to explain. Simple terms. Original version of 9.4, all your unregistered dealer purchases tax to be paid by a recipient. 2019, they have changed this particular amendment. It was a big burden for paying taxes on reverse charge. For a lot of nitty-gritties we have. Identifying the classification, identifying the rate of tax, identifying the nature of supply. This was a big issue. 13th October 2017, there was one notification by virtue of this. Reverse charge under 9.4 was drawn. This 9.4 took a new avatar in 2019, where it says that on specific supply of goods or services received from an unregistered person, received by a notified registered person, the tax needs to be paid under reverse charge. As on today, for construction related activity, any unregistered dealer purchases there. What I have to do? I have to do project specific. Say I am XYZ builder. I have 5 construction activities which are going on. Each particular activity I call that as a project. Project A, B, C, D, E. So each project I have to look at my cost. 80% of my procurements, other than there is a list of services which they have excluded, list of goods, petrol, diesel, salami or your TDR, list of activities to be kept out for this 80% thumb rule. All those expenses, if you have paid tax on forward charge to the supplier and unregistered dealer purchases are there, if it is more than 80%, then I have to pay tax under reverse charge. Cement, there is a specific rate. Other than cement, the other goods and services, there is a regular rate of 18%. This calculation I have to do once in a year. If the project is running for more than a year together, one particular project I will evaluate my P&L account. If my expenses are more than 80%, then pay tax under reverse charge. So once in a year, I have to do this calculation. How do I pay this tax? There is a form called DRC03. Using DRC03, I have to pay this particular tax. Cement, every month whenever I purchase, I pay tax under reverse charge. Other than cement, once in a year, you evaluate your total purchases and then pay your tax. Now, as I was telling you, whenever there is a reverse charge mechanism, there are a few provisions which we have to read together before even coming to a conclusion, I have to pay tax under reverse charge. So first and foremost, levy. I gave this example of by Mumbai versus Suchitra, which is a Bombay High Court judgment. This is a classic case where just because there is a money received, it doesn't fall into the clutches of levy. It doesn't be considered as a supply. So whenever they talk about levy, see whether this satisfies requirements of 9.1 and 5.3. There is one circular which was issued, circular number 178 in August 2022, where all these liquidated damages etc. were kept out of the purview of GST. One example to give, when I receive a compensation, like there is a arbitral tribunal. Tribunal generally will be an extended version of your court. Court extends a recovering officer or a authority for settling the dispute, whom we call as a RP, like a restitution person. This particular liquidated or RP, these are the people who try to settle the dispute and try to calculate the damages. Once the damage is calculated, this is in relation to the loss which has taken into possession. I was giving an example of this term called mense profit, where a tenant was in an unlawful possession of a particular premises. When tenant was there for many years, my arbitral tribunal or this liquidator has to have a yardstick how to calculate a damage. When this damage was calculated at the market rate, saying that per month this is a standard market rate. This particular amount which was calculated, we have to examine whether levy comes into picture, whether this can be called as a supply. Only when there is a supply, levy comes into picture. So my root point, look at your term supply, look whether this is a consideration. If there is no consideration, I don't call this as a levy. So here, this is my starting point called levy or your supply. Second aspect, time of supply. We have provisions called section 12, section 13 under CGST law. Section 12 talks about your time of supply for goods. Section 13 talks about time of supply for services. One good example I'll give you, which was a recent difference which we have taken into consideration. There was one mining activity where all royalty tax needs to be paid under reverse charge mechanism. This particular assessee, like most of you, if you have heard Ballari, this region where Reddy brothers have done mining excavation, where special committee like CBA was appointed and monitoring committee was appointed to overview or to supervise this particular mining activity, where the buyer of this particular mines or mineral ores have to pay the tax to the government directly. Now I pay tax called royalty. What is royalty? Rent for mining activity. This particular rent was paid directly by the buyer to the monitoring committee. Who is monitoring committee? Section 8 of your Companies Act, which is a non-profit organization. Whoever is buying this particular minerals, they were paying this particular royalty directly to the government. Now, this particular assessor's case, royalty was never seen in his books of accounts. Why? Like there is a buyer, there is a monitoring committee. This buyer was paying directly to the monitoring committee this particular rent. So the particular professional who have done the audit, they never shown royalty in their books of accounts. Now government made a demand on this particular assessee saying that on this particular royalty you are supposed to pay tax under reverse charge. We went to the time of supply provisions. Time of supply for services, it says I should have made the payment or the bill should have been accounted in my books of accounts. That 60 days from the end of the date of the bill, my reverse charge gets triggered. In case of goods, there are three particular provisions. Receipt of goods, making the payment, or 30 days from the date of invoice. These are the three provisions where my time of supply gets triggered. In case of service, making the payment or your 60 days from the date of receipt of invoice. Now in this case, who paid the payment? The buyer directly made the payment to the monitoring committee. Have I received any bill? I have not received any bill. So because there was a monitoring committee where buyer was making the payment directly, we took a stand that time of supply never triggered. When time of supply is not triggered, where is the question of payment of tax? Time of supply determines the point in time when I have to pay GST to the government. So this is one another important provision we have to read through. Value of supply. Now I was giving this example of import of services, investment in share capital, money borrowed in foreign currency, external commercial borrowings. These are the two cases where Karnataka GST department is making a demand of 18% applying rule 32, where we will say, referring to this Govind sir and Ganga sir, there is a value of supply. Section 15 doesn't explain this particular transaction. So rule 28 till rule 33, none of the rules explain how this value has to be calculated. Availment of input tax credit. Now this is one of the important provision. Whenever we pay tax on reverse charge basis, please keep in mind, under service tax, we never used to have any challan other than payment challan. Under service tax, I used to pay tax under reverse charge. This payment challan, GAR7 challan, is good enough for me to claim ITC. But under GST law, after showing my returns, also I have to prepare one document called self-tax invoice. Section 31, subsection 3, clause F, where it says that every transaction where you pay tax on reverse charge basis, you have to prepare a document called self-tax invoice. Rule 36 refers to this particular document. Wherever you claim input tax credit, we need to have this particular document. Section 16 is also a little important. You have heard of this Northern Operating System case, Supreme Court judgment in service tax era. It's payment of salary to expat. Now this is one judgment which came in 2022. Most of this MNCs where you have US or Japan, or not like investment from overseas, where we have expats who are working in a particular company. This particular judgment, Northern Operating System, came into picture from service tax, which has opened up litigation like anything for GST also. The background of this particular case is salary paid to expats. Salary paid to expats. Who is an expat? Person who is not of an Indian origin. Person from any foreign origin comes and works in India on work permit basis. This particular employee who is working in India, he continues to be an employee of overseas company. Let's take example of a Japanese company, say Suzuki. Suzuki has deployed 10 of management people in India. These 10 employees who are working in India, they continue to employees of Suzuki Japan because of social service agreement. Like we have EPF, ESA in India. They have this contribution to social service agreement in Japan. They continue to be employees of Suzuki. They also continue to be employees of Maruti Suzuki in India. So this particular aspect went in for dispute under service tax, where they say, look, who is the primary employer? Suzuki happens to be a primary employer. When they came to India, was this contract terminated? No, it was not terminated. Now, this Maruti Suzuki was making the payment to Suzuki for the purpose of this social service agreement. Like a bulk amount is to be paid, bonus and social service agreement. Those payments were also offered for income tax in India, section 192, TDS on salaries. Though you are paying TDS on salary under section 192, because this amount is going to the overseas company who happens to be the principal employer, we consider this as an import of service from this particular parent company. What is the ultimate decision? The Supreme Court said you have to pay service tax under reverse charge basis. This started propaganda into GST also. Whenever you have this foreign employees whom you are paying salary, payment of GST and a reverse charge is a demand which is likely to happen now going down the line because of the Supreme Court judgment in 2022. Question came into picture. 2017-18, 18-19, 19-20, 20-21. Now when I pay tax and a reverse charge, 16 subsection 4, there is a time limit for availment of input tax credit. Most of these GST department, they were asking, whenever you have a tax invoice, show me that within a period of 180 days, you made the payment. Yes sir, I made the payment. Next question they are asking, have you claimed the input tax for that particular financial year within the period of 6 months from the end of the financial year, now extended till 30th November? If answer is no, then they say your time limit for availment of input tax credit is over, you cannot claim input tax credit. Now what happens to those periods, 17-18 till 2021 or 19-20, if I have paid tax under reverse charge? There was a 50-50 thought process. Some professionals are saying that go ahead and claim the input tax credit because you paid that particular tax now under reverse charge. Few professionals are saying that under section 31, subsection 3, you are mandated to issue something called self-tax invoice. Whenever there is an import of service, by virtue of that import of service, you are supposed to issue a self-tax invoice. This self-tax invoice, there is a time limit for issuance under section 13, where time of supply provisions are triggered. Reading these two provisions, one set of professionals say time limit is over, you cannot claim input tax credit. Second set of professionals are saying that, look, the clarity came only in 2022 by way of a Supreme Court verdict. Because the law was clarified, I will pay tax under reverse charge with interest, I will claim the input tax credit now. Going forward, I will regularize. Most likely, defense is going to be to the assessee because it is a unsettled matter under service tax law. Many tribunals have said this import of service is not applicable, no need to pay service tax. Because there is a settled law, there was a bona fide belief. Disclosure in GST returns, this is another one important aspect whenever we have to file returns. Have you showed this particular transaction, table number 3.1D of your GST RTP? Also, availment of this particular reverse charge, table 4A to 4A3, have you disclosed import of service, payment of tax under reverse charge mechanism? This is one another important aspect with respect to claiming input tax credit or making the payment of output tax. One another recent demand which came from the department. Most of this assessee may be other than a company or even company for that matter, who accountants who doesn't have a knowledge to fill a return. Let's take one example. Say there is a supply for 1 lakh in a particular month on which I have to pay tax under forward charge. There is a 20,000 bill from a legal advocate on which I have to pay tax under reverse charge mechanism. 1 lakh rate of tax is 5%, 20,000 rate of tax is 80%. Now when I look into my form GST at 3B, table 3.1A for forward charge, table 3.1D for reverse charge. This accountant didn't know this particular thin line of difference. What he did, entire 1.2 lakh he clubbed and put into table 3.1A. Was this a deliberate mistake? Answer is no. Was the tax on 20,000 paid on reverse charge? Answer is yes. But does your GSTR returns disclose that? Answer is no. Now, department is taking a stand that, look, there was a specific table called 3.1D where you are supposed to show these are the inward supplies on which you are supposed to pay tax on reverse charge. Because you are not shown that 20,000 in this column, say 20 to 12, 2.4 lakh, whatever 18% is there, again was being demanded. Why this demand is created? 9.3 is there or 5.3 is there. Second, you would have claimed the input tax credit on reverse charge. When you look into table 4A, entry number 1, import of goods, entry number 2, import of service, entry number 3, payment of tax on reverse charge basis. Because there are two entries, 4A2, 4A3, department is saying that, look, there was a blank field in 3.1D, now you pay this particular tax. Now again, whenever this kind of demand is being created, we need to show that, look, it was a clerical error, it was not an intentional mistake, because of which I have paid my tax. Take a lenient view, levy a nominal penalty, 125, up to 25,000, it is a prerogative of the officer concerned. Don't levy tax, don't levy interest. But penalty, because there was a clerical error, you can feel free to levy your penalty. This is how we need to take a defense. Collection of tax. Now this is a complexity what we have in GST law. Whenever we have to pay tax, it is very complicated answer. Who should pay the tax? Either supplier has to pay tax or recipient has to pay tax. If the law says supplier should pay, good enough. If it says recipient should pay, good enough. But there are few entries where supplier can pay or recipient can pay. Example? GTA, Goods Transport Agency. Let's take example of say ABC transporters. Now ABC transporters, if they are registered across South India, Karnataka, Andhra, Telangana, Tamil Nadu. Karnataka is their home base. They have a very strong team in Karnataka. Other 3 states, they don't have accountants. Now you remember this Annexure 3, Annexure 1, declaration in Annexure 1, declaration in Annexure 3. This last year, 47th GST Council, July 2022, there was a amendment made to entry for GTA. What they say, wherever you want to pay tax on the reverse charge, give a declaration and collect the tax. Wherever you don't want to collect GST, don't give a declaration. Now, for a moment, let's take example of this Excite batteries. Excite batteries hired this ABC transporter all 4 states. Now this ABC transport in the state of Karnataka, they opted for forward charge. The balance 3 states, they have not opted for forward charge. Same service provider has a choice to pay under forward charge, not to pay under forward charge. Now imagine the plight of an accountant. The moment I see ABC transports, I have to look at the bill. Has he charged GST? Has he not charged GST? If the assessee is not charged GST, I have to pay tax under reverse charge. If assessee has charged GST, look at the declaration. Has he filed the form Annexure 3? Has he given a declaration Annexure 1? All this is what I have to check and pay the tax. Now, this is a complexity where supplier either has to pay or recipient has to pay. For GDA, either supplier or recipient can pay. This is altogether different, third person. Neither supplier will pay, nor recipient will pay. Who will pay? Third person will pay. Example, e-commerce operator, Swiggy, Zomato, Hotel fellow is not paying GST. Buyer is not paying GST. In between, this e-commerce operator called Swiggy or Zomato, they are paying tax under reverse charge. Such a simple law. So when you read in between, now when you have all this fleet of services, keeping a track, what services forward charge, what services reverse charge, and what is on third party. This is how we need to keep a track. 91, 93, 94, 95. 91 forward charge. 93 and 94 reverse charge. Reverse charge. 95 e-commerce operator, a third person comes into picture. Now, I'll just quickly take you through the list of services. First and foremost, this import of service we have understood. Supply of goods by a GTA. Whenever there is a supply of goods by GTA to a factory, society, cooperative society, any person registered under CGST, any body corporate established, any partnership firm, any casual taxable person. Now, these are list of services which are notified. Not all GTA is under reverse charge. Please keep in mind, if the services are given to only this list of services, recipient. One is factory. Point number 2, any society. C, any cooperative society. D, any person who is registered under GST. E, any body corporate established by under any law. IRCTC, for example. Any partnership firm, whether registered or not, under any law. Clause G, any casual taxable person. Now these are the list which is under reverse charge. So when you see only these services, I have to pay tax under reverse charge. What is GTA? Goods Transport Agency is a service where it is in relation to transport of goods by road where a consignment note is issued by whatever name called. Only when the consignment note is issued, it is called GTA. If consignment note is not issued, it is not called as a GTA. Most of the cases, truck, auto, like you have this plywood business or electrical business, electronic component business. So when the truck fellow, auto fellow comes and delivers the goods, he doesn't give any consignment note. He will not be called as a GTA. Just because transport charges is reflecting in your P&L, department may demand, where you have to say, sir, what is covered under reverse charge? Only a GTA. Who is a GTA? The person who is going to issue a consignment note. If the person is not issuing a consignment note, I don't call that as a GTA. Now, where this GTA comes into picture? Where there is an insurance coverage, there is a mandate to carry this particular consignment note. Bailor Bailey concept. Most of these organized companies where they appointed a transporter who has to give a consignment note because he is acting as a bailey. When there is a loss of goods in transit, to claim insurance, consignment note is mandatory. Where I don't need to have claim insurance, like example plywood. If plywood is lost in damage, owner will never claim for insurance. Why? To claim insurance, I need to have this Bailor Bailey concept. Consignment note has to be given for the insurance. Where I don't have consignment note, I don't call that as a GTA. Moving further, entry number 3. Services provided by an individual advocate or firm of advocates by way of legal services. Now this term legal service is little important. What is a legal service? It is a service provided in relation to advice, consultancy, assistance in any branch of law, in any manner and includes representation services. Only this is covered under reverse charge. Most of the companies, you have an advocate who files PF return, who files ESA return. If you see age-old companies, all these PF ESA returns, monthly 3,000, 5,000, retainership basis, because they deal with this labor loss. Most top-rated companies, you see manufacturing companies, they have an advocate to handle this labor issues. When I say labor issue, it is not in the court of law. This is just to deal with this officer for PF ESA related aspects, maintenance of books, filing of returns. Can I call that as a legal service for this particular activity? Answer is a big no. It says legal service means service provided in relation to advice, consultancy or assistance in any branch of law. PF return, it is not a branch of law. Bookkeeping, accounting, it is not a branch of law. If there is a demand created where I go and represent as an advocate, as an authorized person, example, section 113 of your CGST Act, who is the authorized representative? Person who is a chartered accountant, cost accountant, company secretary or an advocate. Advocate is a person notified for representative purpose. So advocate being a legal degree holding, he is authorized to do a representation. Then he is called as a legal services. Just because I have paid to an advocate, it doesn't come under reverse charge mechanism. Next, services by arbitral tribunal. I say this tribunal cases where there is a court fee I have to pay, or this liquidator whom officially I have to pay fee. For those cases, I have to pay tax under reverse charge. Entry number 5, sponsorship. Services provided by way of a sponsorship to any body, corporate or partnership firm. I'll touch on mostly demanded, most recurring in departmental audits for understanding purpose. 6. Services by central government, state government, union territory, local authority to a business entity. Now, this services of business entity from government is something which is most in dispute. The moment we see any rates and taxes, like example, factory license, pollution control license, your weights and measurements act, your calibration of your weighing devices. If you look at these manufacturing companies, when you have this 10 mg, 100 mg manufacturing capacity, you need to have these devices calibrated every year. That means you have to go to this authority, get this calibration done for your devices. Where you pay these fees to the government authorities, the tax was being demanded on reverse charge. Why? They say services supplied by central government, state government, union territory or local authority to a business entity, excluding renting of immovable property, services by postal department, services in relation to aircraft or vessel, transportation of goods or passengers. Barring these three, rest all is under reverse charge. Who has to pay tax on reverse charge? Business entity located in a taxable territory. Demand is being created for these services. I have a separate slide where I have explained what are exempted, how we have to take a defense. This I will park for a particular exemption notification. Then, services by way of renting of residential dwelling to registered person. August 2022, 47 GST Council is a nightmare for this particular entry. All of a sudden from blue, they have removed this exemption for residential dwelling. What they say? Services by way of renting of residential dwelling to registered person. Tax needs to be paid by registered person on reverse charge basis. Example, L&T. L&T have a site for construction purpose. So L&T is constructing a highway. So we have seen this Bangalore to Mysore express highway. When this highway is being constructed, I have to have a campsite for my engineers at a stretch of every 50 kilometers. Every 50 kilometers, I need to have my engineers for supervision purpose. Now, when these engineers have to stay, they cannot stay on road. They cannot stay in a jungle. What they do? They go to the nearby villages. They hire these small residential places for employees to stay. When employees are staying there, it is for their residential purpose. Now, this activity was brought under reverse charge basis. Landlord, as a landlord, when I give this activity or this renting to a company, I am not touched. Landlord need not be bothered. Who has to be bothered? A company who is registered, who is getting these services, they should pay tax under reverse charge. Now, there are two aspects: commercial activity, renting, residential activity. What is a residential activity? Residential activity which is meant for domicile purpose, which is meant for stay purpose, which is other than your business or commerce. Example, PG. We had this advance ruling in case of 2022. There was one advance ruling. I don't recollect this particular case where PG was brought under clutches of GST, where the assessee has approached to the High Court saying that I'm running this PG which is meant for accommodation purpose to the working boys or studying people. So they say my PG is a residential activity, it is not meant for business or commerce. So it is called as a residential dwelling where it is exempted under GST law. That point in time, this particular entry came by virtue of 47 of 2022. So here what we need to understand, any rent I pay as a registered person, examine, is it for residential purpose, is it for commercial purpose? If it is for residential purpose, I as a recipient, I will pay tax on reverse charge. If it is for commercial purpose, I need not be bothered, my service provider should be bothered. So here, when you are filing IT return for an individual who is having income from house property, what we need to do? This house property, is it for commercial purpose, is it for residential dwelling purpose? If it is for residential dwelling, service provider is untouched. If it is for commercial activity, he has to charge on forward charge basis. So why is that so? Exemption notification, it has exempted renting of immobile property for residential purpose. What was being brought under reverse charge? Residential unit in the hands of a registered person. So as a landlord, I am untouched.
Both are unregistered. If there are no one is registered.
Here, okay. Section 24,
No.
compulsory registration.
No.
You are under.
Turnover is less than 4 crore.
If your turnover is less than section 22, 20 lakhs, then no need to pay tax under reverse charge. No need to pay tax.
So that will be exempted total.
There is one slide which I have exclusively covered. I am not registered at reverse. I am not registered because my turnover didn't exceed it. But this entry came into picture. Like a small business person, he has hired a particular shop or a house for his employees to stay. Say sweet shop. His turnover is say 15 lakhs. He is paying monthly 5,000 on this accommodation given to his employees. Because his threshold limit is less than 20 lakhs, he cannot register. By virtue of this entry, it says register person. Section 24, compulsory registration, where you are ought to pay tax under reverse charge. Because the term is used register person, I need not pay GST. Transfer of development rights, tax is on a reverse charge. No one is concerned. I'll skip this particular entry. Services supplied by a director, entry number 7. This any amount paid to a director other than salary, sitting fees, commission, or loyalty fee, whatever you pay other than salary, this is covered under reverse charge. Entry number 10. Services provided by a person located in non-taxable territory by way of transportation goods by a vessel from a place outside India up to the customs station. This entry number 10 was under dispute in Supreme Court, Mohit Minerals case, where they say it is unconstitutional. Once I pay GST on CAF basis, customs under section 4, no need to pay again tax under this particular import of service. As on today, entry number 10 is ultra vires. I'm just coming to the important entries where we deal day-to-day basis. Services supplied by way of a renting of a motor vehicle designed to carry passengers where cost of fuel is included. Any body corporate located in taxable territory where service provider is not charging rate of 12% on his bill. So in case of a motor vehicle, like example, SRS Travels. SRS Travels, they charge GST because they wanted to claim input tax credit. Say, let's take another service provider, say XYZ Travels, Tours and Travels. If my service provider, he gives me a bill where he says 5% is the rate of tax. Because he's not charging 12%, I have to pay tax under reverse charge. So as a company, what I have to do? Now, renting of a motor vehicle, it's a block credit. No input tax credit is allowed. What we have to do, if my service provider is charging GST at the rate of 12%, pay the GST to the service provider. If my service provider is charging rate of 5%, I have to pay tax under reverse charge. So service provider is giving a bill, no GST is mentioned. Pay tax on reverse charge 5%. Why? Rate of tax is 5%. If input tax credit needs to be taken by the service provider, then 12% is the rate of tax. To reduce my cost, pay 5% tax under reverse charge. Can you take ITC? Answer. If you are into that activity of supply, then you can claim ITC. If you are not into that activity, no input tax credit. That's all. So these are the list of services which we have to take into consideration. Goods also I'll quickly run through. Goods on which tax needs to be paid on reverse charge. Cashew nuts, not shelled or peeled, registered person. BD wrapper, any registered person. Tobacco leaves, again a registered person. Essential oils other than citrus fruit, any registered person. Silk yarn, registered person. Raw cotton, registered person. Supply of lottery distributor and selling agent. Used vehicles, seized and confiscated goods, old and used goods, waste and scrap, registered person. Most of the time when this vehicle is confiscated, section 129 or section 130 of CGST Act, consignment was going without e-way bill, where owner is not traceable, service provider is also not willing to come forward to pay the taxes. What the government will do, they will put it for auction. If you visit this Koramangala VAT office, you will see all these lorries and trucks which are waiting at Koramangala. What happens here is government will wait for 14 days, wait for 28 days. If the owner doesn't turn up, then they will put it for auction. So along with the goods, to recover the tax, even the vehicles also will be put for auction. If this goods is sold by central government, state government or local authority, a person who is buying the goods happens to be a registered person, that person has to pay tax on reverse charge basis. So as an individual, I go and participate in the auction, I buy that motor vehicle, I need not pay tax on reverse charge. Similarly, in case of your police department, all these two-wheeler, three-wheeler, four-wheeler, where it was lying in the station, if they wanted to discard over a period of time, whoever participates in the auction, not for business or commerce, no need to pay tax on reverse charge. If the person is a registered person, they need to pay tax on reverse charge. These are in relation to goods. 9.4, this is in relation to your 80% of purchases from registered person, because no one is covered in this. I've skipped this particular slide. Couple of provisions, like I was telling, what could be the difference with respect to payment of taxes when there is a demand created? Revenue neutrality. Now this is the most commonly argued upon point. Sir, I pay tax on reverse charge. When I pay tax on reverse charge, I can claim input tax credit. Why? Section 16, whatever tax I have paid, it is in relation to furtherance of business, I can claim input tax credit. So when it is so, if I not pay tax on reverse charge, because of revenue neutrality, can you drop this particular demand? This was the point till GST came into picture. This is one tribunal judgment, John Energy Limited. There was one more case law also, where the tribunal said, look at the assessor's position. Now in this particular case, most of the time assessor was paying his output tax using cash ledger. Now when you look at your payment of taxes, section 49, I can pay the tax through credit ledger, through cash ledger. Now when I have to pay tax on reverse charge, what happens? First I'll create a liability. This liability I'll pay through cash ledger. Once I pay the tax on reverse charge, it comes and sits in my credit ledger. Like example, legal services. Legal service, I'll show in table number 3.1D. The moment I show this is my output tax, which I have to pay on reverse charge, I cannot use my ITC. What I have to do? I have to deposit cash. I have deposited cash. Once I make the payment, this comes and sits in my credit ledger. Now, when he has to pay his output tax, the assessee was paying 50% in cash, 50% in credit ledger. Now, the courts have examined. For a moment, if we assume that this assessee has to pay tax on reverse charge, what happens? It comes and sits in his credit ledger. Now, his payment in cash ledger is much higher than a reverse charge. I repeat, his payment of tax in cash ledger is much higher than the payment he has to make in through credit ledger. By virtue of this, it was not an intentional act of the assessee. Because the assessee can claim the credit, once he takes the input tax credit on reverse charge, his payment in cash ledger comes down to that extent and credit ledger gets utilized. So this tribunal has examined, assessee has a fit case where this cash ledger was always more than his tax payment on reverse charge. By virtue of this, the matter was dropped from demand. This was one tribunal judgment. The same matter went into your Bharti Airtel case and Mohit Minerals case. This Supreme Court judgment in relation to Mohit Minerals, this was discussed at length, revenue neutrality. So because I can claim the ITC, if I don't pay the tax, it is not going to burden. The courts have said, look, this levy of GST on ocean freight is unconstitutional. I do agree. But this principle of revenue neutrality, I cannot examine for the reason a duty was casted on a registered person. Once a duty was casted, you have to pay for that. You cannot argue that you can claim ITC, and because you have a right to claim ITC, I can drop this particular demand. So this point of revenue neutrality, because it was discussed at the helm of FS, we may not take defense much in cases. Maybe this case where if I look at my output tax, my payment of output tax to cash ledger is more compared to my reverse charge tax. That could be one defense where we can defend on revenue neutrality. So how does it comes for rescue? Demand under 73, demand under 74. Demand under 73, show cause notice. I can get a show cause notice where there is a time limit of section 7310. Within a span of 3 years, they have to issue an order. For all 17-18 cases, 31st December 2023 is the deadline for the department. That means before 30th September, they have to issue a show cause notice. I repeat this point once again. For 1718, a show cause notice can be issued under 73 or 74. 73 is a case where there is no fraud, willful misstatement or suppression. 74 is a case of willful misstatement, suppression or fraud. Now, in case if I say to the officer, look, I have the expenses which was duly recorded in my financial statements. I have not paid the tax. Why I have not paid the tax? I was in a bona fide belief that this is not subjected to GST. Addition to that, if I have to pay tax under reverse charge, this reverse charge tax is much lesser compared to my output tax paid in cash ledger. If this difference can be prevailed, show cause notice issued under 74 has to be changed to 73. Once, like these days, all your show cause notices are coming under 74. Why? For 74, 5 years is a time limit. For 73, 3 years is a time limit from annual return. Because 73 is ending on by this 31st December, department may issue notice under 74. And this matter gets settled, maybe like once the show cause notice is issued, invariably 9 months to 1 year it will take to get the order passed. By the time your order is passed, if you can convince the officer that 74, fraud, willful misstatement, suppression is not applicable, it gets converted into 73. Once it is getting converted into 73, time limit of 3 years is there, where this demand itself will become an unfructuous demand, whereby I need not pay any tax, I need also not pay interest. So this is how you have to define how a show cause notice has to be tackled. Now, whenever there is a demand, please examine first and foremost what is the composition of my output tax. 80-20, 50-50, 40-60. What is the contribution of my tax paid through cash ledger? That point in time, if this tax was paid, whether this can reduce my cash ledger? Answer is yes. My books of accounts are there. There was no fraud. There was no willful suppression or misstatement. When books of accounts are maintained, I cannot be called as a 74. I cannot have a notice issued under 74. Rather, it has to be issued under 73. So this is one difference we can take into consideration. Next, there is one Madras High Court judgment in case of Tenco RC India Private Limited. This is again under service tax law. Why I have taken to this issuance of a notice under 74. If you can convince to the officer concerned that, sir, always I have sufficient balance. Always I have sufficient balance in my cash ledger. I have paid my output tax in cash ledger. I never had intention to evade payment of tax. Even if I have paid this tax, I could have claimed ITC. Even if I have taken ITC, this could have been more, it is much lesser than my tax already paid in cash. If these two things can be established, your issuance of notice under 73 gets converted to 73, where 3 years is your time limit. This is Madras High Court judgment which came under GST law, Yamaha Motor versus Assistant Commissioner CGST. Now most of us do argue this is a matter in relation to interest, demand of interest under section 50. Tax ought to be paid but not paid. Tax need to be paid but not paid. Like I will give one example. So I have filed my return in the month of October 2020, where instead of typing in 1,20,000, my accountant has typed only 1 lakh. 20,000 was missed out. On 1 lakh, 18% GST was paid. 20,000 was missed out. While doing the annual return reconciliation, October return, maybe somewhere in June 2021, auditor noted that 20,000 was missed out. Was that intentional? Sir, it is a clerical error, I have missed out. Now question comes here. When you pay your October 2020 tax on 20,000 in June 2021, should I need to pay interest under section 50? The difference comes into picture. So I have sufficient balance in credit ledger, I also have sufficient balance in cash ledger. Means my money is already available with you. With whom? Revenue. Cash ledger, credit ledger is both available with the department. When my money is available with you, how can you say that there is a loss to the revenue? I have sufficient balance. On 20,000, assuming 3,600 is the tax what I have to pay, my credit balance has more than 1 lakh closing balance across all the months. My 3,600 is output tax, closing balance is 1 lakh. Can't I take this difference? Answer is no. Why? Because this matter went into Supreme Court under erstwhile excise law, where they say, we understand that you have sufficient balance in credit ledger, cash ledger. Unless you pay that particular tax by debiting cash ledger or credit ledger, that does not get attributable to revenue. Article 265, authority to collect tax. Unless you disclose, unless you pay that particular tax, it does not accrue as a revenue. Considering that particular point, this particular Madras High Court judgment, they have said that unless you pay the tax, it is deemed that you have not paid tax. Interest needs to be paid under 50 subsection 1. This one more entry under 50 subsection 3, rule 88C, which has come into picture, again 47 GST Council meeting. Very important and very interesting provision most of us have to run through. Input tax credit wrongly availed, reversed. Input tax credit wrongly availed and utilized. There are two scenarios. I have taken input tax credit, and I have reversed. Before utilization, after utilization. Now here, this particular 50 subsection 3 comes in picture and says, if you have taken input tax credit more than what you are to take, then pay interest at the rate applicable up to 24%. As on today, 50 subsection 3, 18% is the rate notified. Though entry under 50 subsection 3 says up to 24%, please keep in mind, this entry 50 subsection 3 was retrospectively notified from 1st July 2017. As on today, 18% is my interest rate. So here, there is a mechanism they have given. Look at your input tax credit. Like, let's take one example. 1,20,000 is my input tax credit. Accountant has punched as 2,10,000. 120 was typed as 210. Clerical error. 90,000 was the excess credit I have taken. Now this 90,000 wrongly availed or utilized, wrongly availed and utilized. How do I examine? Look at your closing balance every month in the electronic credit ledger. Every month you have a closing balance 1 lakh and above. How much credit I have taken? 90,000. If I remove this 90,000, my balance in credit ledger was sufficient enough. So because my balance is sufficient enough, interest in the 50 subsection 3 is not applicable. If any particular month this 90 balance is coming down, that is a month I have utilized. Assuming for a particular month, my closing balance is 50,000, 50. My excess availment is 90,000. How much I have availed and utilized? Only 40,000, not 90,000. Why? Balance 50,000 is already lying in my electronic credit ledger. Only availed and utilized I have to pay interest. So here, when the department is doing this interest demand, 50 subsection 3, look at your running balance. As long as your wrong availment credit is higher than closing balance, no need to pay interest in the 50 subsection 3. This is one another provision which comes into your rescue. Now, these are the exemption notifications. One of our friend was asking, like a registered person, unregistered person. Whenever tax is being demanded on reverse charge basis, these exemption notifications thoroughly we have to understand. First entry. Services by central government, state government, union territory or local authority, excluding the following. Services of Department of Post, Aircraft, Transport of goods or passengers, any service other than services covered under A2C above, provided to business entity. So first and foremost, entry number 6 under notification 12 of 2017, there is an exemption. What they say, services given by the government to a business entity is taxable. Services provided by the government to a business entity is taxable. Let's keep this in mind and travel further. When they say so, they say services provided by central government, state government or local authority to a business entity with an aggregate turnover up to such amount in the preceding financial year as makes it eligible for exemption. So, I am a business entity, I have received the government services, but I am not registered under GST. Why? My aggregate turnover is less than the threshold limit specified under section 22. Special category states 10 lakhs, other than special category states 20 lakh. Manipur, Mizoram, Nagaland, Tripura. These 4 states 10 lakhs is your threshold limit. Other than this, all your 20 lakhs is the threshold limit. So what it says, just because you are a service provider or just because you are a seller, you have received the services from government, you need not pay tax under reverse charge. Why? Because I have a turnover limit which is less than your specified limit. So just because government services are received by business entity, I need not pay reverse charge. Is this exemption notification clear? If I am not liable for registration, no need to pay tax under reverse charge. This is my entry number 7. Next, entry number 9. where it says services provided by central government, state government, union territory, local authority. Consideration for such services does not exceed 5,000 rupees. Now this is a threshold limit, like your Residential Welfare Association (RWA), up to 7,500, no need to pay any GST. If my annual monthly maintenance is 10,000, I have to pay GST on 10,000. I need not claim deduction of 7,500. Up to 7,500, if it is there, I need not pay any GST on Residential Welfare Association. Similarly, in case of government services, cumulative value of my services received from government is less than 5,000, no need to pay tax on reverse charge. First entry, any services given to business entity is taxable. Second entry, just because you are a business entity, you are not supposed to pay tax. Why? If you are not registered because of threshold turnover, no need to pay tax under reverse charge. Third, assuming that I am a registered person, the services received from government is less than 5,000, no need to pay tax on reverse charge. Is the three entries clear? We can go further. Next. Now this is a hardcore entry. It comes into rescue for many of these manufacturing companies. I'll read the entry and I'll explain this provision. Services provided by central government, state government, union territory, local authority by way of registration required under any law for time being in force. Testing, calibration, safety check or certification relating to protection or safety of workers, consumers or public at large, including fire license required under any law for the timing in force. Now what it says, any money I pay to the central government, state government for the purpose of obtaining registration. Example, pollution control board, based on my turnover, based on my machineries installed, based on the manpower employed, I pay my to the government to get pollution control license. Should I pay tax under reverse charge? Answer is no. Entry number 47. Next example, labor license. Like for applying the employees from one state to another state, I need to pay labor license. I have to get a permission from the local state authority for taking the labor from various other states or even local states. When I take the permission, it is again a statutory function where it is covered under exemption notification. Entry number 47, this is covered under notification 12 of 2017. This is one important notification where the moment we see the P&L account where we say rates and taxes, any government fee which we have paid, just because it is service received from government, department is having a habit of demanding taxes. My submission is, look at this entry, where it is a statutory function, where it is a what you can say, a sovereign function of a particular state government or local authority. I need not pay tax on reverse charge. Example, so I have to get a visa permission fee or other what do you call this any license to apply a motor vehicle. I have to pay license to run the motor vehicle between the states. Now, is it a tax paid? Answer is yes, tax paid. Is it statutory levy? Answer is statutory levy. Without paying this tax, I am not authorized to run this motor vehicle on the road. Why? Because it is for public safety. Now, when these conditions are satisfied, though the amount is exceeding 5,000, I need not pay tax under reverse charge. Now, this is one particular entry where government is targeting most manufacturing companies to demand tax on reverse charge. Any doubts before I go further next to exemption? Entry 47 is clear. Next, goods transport agency. I'll give one example before we touch upon this. Take example of this big basket or any of this conglomerate operating like big basket. Look at this fruits and vegetables which are supplied through big basket. Most of the agriculturists have tie up with big basket. Right from farm, the produce gets picked up, comes to my warehouse. From there, it gets supplied to the door delivery. When you look into the P&L, there is something called transportation charges, like GTA. Most of these heavy trucks which fly, say from Maharashtra, I buy onion and potato, which comes to a big basket. From Karnataka, this banana gets transported to, say, Andhra or Tamil Nadu. When there is a movement of goods by a GTA, should I need to pay tax and reverse charge just because I call this a transportation? Answer is no, because of this entry number 21, which exclusively talks about a GTA. What it says, services provided by a GTA by way of transportation in relation to agricultural produce. Any of this agricultural produce just because I pay transportation charges, no reverse charge. Because most of the time we get confused. The moment I say transportation, department also feels, look, you have received transportation service, you never paid on GST. Service provider also never says he has charged GST. When I look at this particular bill, it says pick your, 20 tons of mango picked up from Chikballapur to Bangalore. Now, when it's agriculture produce, no need to pay any tax on reverse charge. Milk, salt, food grain, including flour, pulses, and rice. So rice, I was giving one example of a trader who was dealing with non-branded rice. Just because this trader is not registered and his P&L shows, say 18 lakhs as transportation charges. Coffee, like Chikmagalur is one particular case where most of the showcase notices are issued. Why? Coffee and this arecanut are exempted from GST. When you look into the P&L, lakhs of rupees was paid as transportation. Department started issuing notices that on this transportation service, you have received a GTA bill, you have not paid tax under reverse charge. Section 24, compulsory registration. Where we have to look at this entry number 21 and say, so this is an agriculture produce. If I am satisfied this is an agriculture produce, I need not pay tax on reverse charge. Like where, now when I talk about this particular case, 2018 case, now we have to define. Example, coffee which was grown in a particular land was shifted from say Chikmagalur to Bangalore, where I have paid 5 lakhs as transportation charges. How do you say this is an agriculture produce? The transport says this many tons of coffee was picked up and delivered. Now we have travelled back to prove that seller is this person. This seller has got a permission from MSTC to grow this particular coffee and sell this particular coffee. He happens to be agriculturist, this is the number of acres he is having a possession. Onus burden is on me to prove that GST need not be paid on reverse charge. So for these transportation cases, I would recommend wherever we are not paying taxes, please see how we will use this exemption notification. Why? Onus of burden is on us to prove this is an agriculture produce. Next, legal service. Now, services of advocate to advocate, advocate to a partnership firm. These are the activities which are exempted under GST. Next, this is one important provision, guidance to be given to the assessee. Section 77 under CGST law. Now, GTA, like most of us have not examined should I need to pay IGST, CGST, SGST when I have paid tax on reverse charge. Like I was giving example, let's take example of VRL. VRL have not been charging GST for all their bills. Say Maharashtra, Tamil Nadu, Andhra, Kerala, they won't charge GST. Karnataka, they would charge GST. Why? They have an option to charge on forward charge basis, not to charge on forward charge basis. Now, the moment I see VRL, my accountant has a habit. Sir, VRL go to sir, Ananda Circle head office in Ella Ilinda services. SGST, CGST, SGST, CGST. When I look at the bill, the goods could have been picked up from Maharashtra, goods have been picked up from Tamil Nadu. When I look at the bill, they say VRL Pune, VRL Sangli. Now these are the places which are there in Rajasthan, Maharashtra. VRL is a service provider from Maharashtra. I am a service recipient, section 12, subsection 8, place of supply provisions. I have my place where I am registered happens to be the place of supply. So I am registered in Karnataka, my service provider is outside Karnataka. So place of supply is Karnataka, service provider is from Maharashtra. IGST should have been paid, but I have paid CGST, SGST. Department is started recovering, look, you have paid your tax properly. But payment of IGST, you are getting a credit of IGST, ought to be in CGST, SGST. Because you have taken a wrong credit, I am demanding again you to pay CGST, SGST. There, section 77 comes into picture and say, I have paid a tax erroneously instead of I see this or vice versa. In those cases, pay the proper tax, claim a refund of that particular wrong remittance. Interest, they say no, not applicable. Penalty, because already I have paid the tax, no penalty is applicable. 2021, there was an amendment made to this refund provisions. Rule 89 talks about your filing a refund application. Under section 77, when I say a refund application has to be filed, reference was made to section 54, where 2 years is the time limit within which you have to file your refund application. Now this matter, where you have paid IGST instead of actually C&S, the moment I say it is a wrong tax, it doesn't become a tax. Once I say it is not a tax, then the time limit of 2 years is gone. To put a cap on that 2 years, the amendment was made to Rule 89, where they say any taxes paid from 1718 till this notification 35 of 2021, which came in September 21, they say within a span of 2 years you can claim refund. Now, when I say 2 years, September 21, 22, 23. Till September 23, I have time limit to file a refund application to claim refund of any of those wrong taxes. Why? When you go back and look at your reverse charge, do a self-introspection. Wherever tax was paid and reverse charge, CGST, SGST or IGST, look at your service provider, look at your place of supply. If I paid wrong tax, don't worry, pay the proper tax, claim a refund for that particular wrong tax. Why? Time is running out as per section 54, rule 89, 2 years is a cap they have put in for filing a refund application. Now, what are the ways the department can find that a tax ought to be paid but not paid? Sources for the department to trigger or to identify your levy. Inward supplies list, unregistered dealer, imports, category of supplies, notified, etc. What they will do? They'll ask you to give your purchase register. They'll ask you to give your expense register. When they run through your expense register, purchase register, they'll ask you put the GST number of your service provider. Wherever GST number is not there, I could have an import, I could have a unregistered purchases. Those are the cases where they could demand tax under 9.3, tax under 5.3. Now, 9353 where notified category of services. One is your GTA, second is your import of service. Now these are the two categories where service provider is not registered, demand may be brought into picture. Next, your financial statements. In your financial statements, Schedule 2 of your Companies Act, if you run through your notes to account, somewhere you will give a details of money spent in foreign currency, money earned in foreign currency. Like exports, we use the FOB value which is notified by the customs for the purpose of conversion. In case of imports, whatever value we have shown in our books, that value will be quantified. Money spent in foreign currency, money earned in foreign currency. This table is one indication for the department for your IGST provisions. Notification 10 of 2017, wherever tax is being demanded, this is one source of information. So my advice is, go through your notes to accounts, look into your notes where this money spent in foreign currency is given. And also related party transaction. Wherever we have related party transaction, Schedule 1, where there is a supply without consideration. Like example, bank guarantee. A parent company has given a bank guarantee on behalf of a sister company in case of a loan availed in foreign currency, ECB. Now I, as an auditor, quantify in my notes to account saying that these are the related party transactions. All my related party transactions, Schedule 1 of your GST law, though there is no supply, demand can be invoked. Last, receipt of information from the government records, payment towards royalty, fees for license, permission, etc. Though I don't provide the information, the government can dig this information from the records available. Now, this is the last slide of my discussion. How to mitigate, how to reduce the friction, the litigation from the department. First and foremost, as a chartered accountant, we are good in accounting. We are very strong in our area of domain function called setting right the books of accounts. So first activity we have to do is designing the chart of accounts. We have to design this chart of accounts in such a fashion way the accountant gets to know that this particular nature of transaction, these are the list of GLs which we have to be selected. Where GST number is available, this particular GL code. Where GST number is not available, this particular GL code. So designing your chart of accounts, like you have this QR code. I don't know how many of you have seen these companies like this Embassy Group and all. One example from Embassy Group, this company never does the purchase booking. Seller, the vendors, they themselves will post the entry on behalf of the recipient. What they will do, there is a domain, there is a login provided to me. As a supplier, I log in using my login credentials, my bill number, purchase order number, bill value, HSN classification, description, purchase order, and this what is called the payment terms. All these aspects I have to key in, and the project center also. Based on this information, the accounting entry gets posted in the books of Embassy Group. Now what is happening here? Service, the accounting itself was passed on to the suppliers. You need money, you have to do that. Now streamline was done such a neat manner. Looking at my entries posted, I'll pick that these are the ledgers where I have to pay tax under reverse charge mechanism. So the first and foremost point is spend decent time on designing your chart of accounts. Next aspect, proper training on identification of this place of supply, levy, payment of tax. Place of supply is one area most of us we do a mistake in identification. Like I was giving example of transportation services. So wherever there is a transport services, identifying 12.8. One another example, we have intermediary services. Intermediary services, like a agent, a person who gets commission for acting as a middleman. The place of supply provision says that where this particular service provider is located, that shall be the place of supply. So I'll give an example. So there is one company called Mitsubishi. Mitsubishi is registered in, it's a company in Japan. For Mitsubishi, I work as a selling agent. I find out the customers. I link my customer with Mitsubishi. Mitsubishi directly makes the supply to my customer. Customer makes the payment directly to Mitsubishi. I'm acting as a middleman. I draw commission for this particular supply. Assuming I draw 10 lakhs as my commission, as per provisions of section 13, subsection 8, where I am registered, that shall be my place of supply. So what I have to do? 18%, 1,80,000. CGST, SGST, 90,000, 90,000 I have to pay CGST, SGST. It is not IGST. So running through the place of supply provisions is a must. Once, if you're doing a statutory audit, if you're doing a tax audit, if you're doing an internal audit, my advice is read section 12, read section 13 of IGST law. Why? Most of my transactions where I paid intrastate or interstate will change because of section 12 or section 13. Training from your end to the clients is one thing which is very, very important. Reconciliation techniques. This Jan 2023 onwards, most of you are aware, 2B has come into picture. The way we do bank reconciliation, I don't know how many of you are doing bank reconciliation. 1980s, 1990s, bank reconciliation was done manually. After this tally has come, we never did bank reconciliation. Open F5, keep on that, put the date, bank reconciliation is done. Manual way of balance as per books, balance as per passbook. This reconciliation is something we forgot. To bring back our knowledge, 2B was brought into picture. My input tax credit as per books, derived input tax as per GST at 2B. Now this is a reconciliation we are doing from Jan 2023 onwards. Similar to this, now reconciliation of my tax paid under reverse charge. That means to say, in my notes to accounts, what expenses I have shown in foreign currency. In my notes to accounts, what related party transactions are there. In my P&L, in the trial balance, what amount was sitting to transportation expense. When I have chart of accounts designed properly, whatever balance is sitting in this GL, that should be factored into my 3B workings. Now this reconciliation, one thing which you have to do at least once in 6 months to get away from litigation aspects. Expert from opinion on record, which is a bona fide belief. Now this is one thing I recommend to most of the professionals. Whenever there is a matter, maybe income tax, maybe transfer pricing, maybe GST, maybe RERA, maybe real estate, we always take advice from a legal expert. Why do we take an opinion? There is a matter which requires some advice for decision making. On the basis of advice, I relied upon that no need to pay tax. Example, this Northern operating system, payment of tax under reverse charge on expat salary. If I have not to pay GST on reverse charge, I have to take an expert opinion. Why? There is a belief that GST is not payable. How did you come into this decision? So there was a legal opinion given by an professional. I relied upon. There was no intention, fraud, willful misstatement, suppression. When the matter goes to the court of law, they will examine. Notice under 73, notice under 74. 3 years, 5 years. By chance, if a notice was issued under 74, which should have been ought to be issued under 73. So why? So look, I have taken a decision on the basis of this chartered accounts advice. So when I produce this before the court of law, your intention, fraud, willful misstatement, suppression is not tenable. That is the reason I would say, wherever you have not paid any tax, like one example you were saying, a registered person only needs to pay tax on reverse charge. An unregistered need not pay tax on reverse charge. Email communication, a written legal opinion. Let there be any document on record. Last but not least, advanced ruling. You don't get an answer, go for advanced ruling. Like before you file an application with advanced ruling, you know the answer well in advance. You'll ask, sir, should I need to pay tax? They'll say, yes, you have to pay. Sir, should I need to register under GST? Yes, you need to register under GST. Sir, can you take input tax credit? No, you cannot take input tax credit. Though you know your answer well in advance, file an application for advanced ruling. Why? Where the matters are, the stake is high. Advanced ruling is something which is at least binding on you and your jurisdictional officer. Whatever argument you want to fight after 3 years, fight before the advanced ruling authority. Prepare for the worst. If I get an adverse outcome, writ petition is there, Article 226, go and file, test your waters in courts of law. So this is my last advice with respect to advanced ruling. So we come to the end of our discussion. Any questions are there? I'll take up for clarification.
Suppose if you are incurring the local transportation in crores of rupees without taking the CN from the GTA. They are not GTA. So local transport. So what will, you are the registered person, are you liable to pay under the RCM?
Point number 1, we will examine whether it is a GTA.
No, I said that it is not the GTA because you said it is CN not, they are not issuing the CN.
So first we will examine with respect to GTA. If it is applicable, then I will go ahead and make the payment. No sir, I am not liable to pay.
And it is not an agricultural goods, it is a product.
Product. So coming to methodology is by paying tax under reverse charge, is there impact on working capital? Like example, software company. Most of the software company, they export services. Once they export services, they claim a refund of accumulated input tax credit. See, if there is an import of service, like one example, license fee. When you are working on a German project, it's a German project, entire the documents are in German language. My team who's working in India, they don't know German language. So to convert those documents, I need to have a license, official converter. When I do this official conversion, lakhs of rupees, crores of rupees I have to spend. So when I pay this particular tax, now it's a burden on my working capital. Now question comes here. If levy is not clear, don't pay. If it is not a burden on your working capital, why is advice? Pay the tax, claim the input tax credit.
And if the input tax credit you are not able to utilize that.
Then yes, like if you're not in a position to utilize, you're blocking your working capital. Don't do that mistake. Better you take an expert opinion, don't pay tax on reverse charge. Not satisfied with expert opinion, go for advanced ruling.
So in JDA, ownership has to pay GST.
The transfer of development rights, TDR, promoter has to pay tax on reverse charge basis. Promoter has to pay.
Is it threshold limit? Is it applicable in all cases like RCM? No, that's
Sir,
but
when
in
it-
those
when it-
days they used to say that RCM is not applicable for the threshold limit.
Correct, correct.
Now, while discussing, you said threshold limit is applicable.
When I'm saying, look at your turnover, look at your supply. If your outward supply, when I say supply, the term called aggregate turnover comes into picture. For the term aggregate turnover, section 2 clause 6, it says your intrastate supply, interstate supply, cross border, the supplies to the same person, excluding tax on supplies on which you pay on reverse charge. So I take only my supplies, that is my sales into consideration, not expense into consideration. So if my sales is less than that 20 lakhs, no need to register, no need to pay tax under reverse charge basis.
No, I'm a GST dealer.
Yes.
I do not know the supplier of service or goods. Is threshold limit?
It's like, okay, I don't know my service provider's condition.
Yes.
Now 9(4) comes into picture in case of an unregistered person. That is in case of a promoter. Other than promoter, there is no unregistered levy under 9(3). So only in case of construction, promoter you need to be worried, sir. Otherwise, nothing to worry.
In 2B, the GTA, this one, no? That,
Pay tax on reverse charge.
and it is system generated, this one is also available where it says 5%.
Yes, sir.
And those days 5% is a constitutional rate which we are not eligible to take input tax credit.
Sir, I'll
And that time we were calculating at the rate of 12% and we used to avoid that ITC. Which one is correct, sir?
Sir, your good name, sir?
Satish.
For a moment, let's assume that Satish happens to be a service provider to a company. Let's take Gopaldas Exports. Gopaldas Exports is receiving services from Satish. Now Satish may be a registered person who is rendering this service charging 12% rate of tax. Satish may be a person who is charging 5% rate of tax. When I look at this entry 11 of 2017, which gives about a rate clarity, 5% to claim input tax credit, 5% not to claim input tax credit, 12% to claim input tax credit. This is a condition given to Satish, not to the service recipient called Gopaldas Exports. So as a company, when I pay tax on reverse charge, I can pay very well 5%, and if I am eligible, I'll claim. If I am not eligible, I'll leave to my P&L as an expense.
Yeah,
So
eligible or not?
as a company, if I pay, now you're talking about goods, I'm eligible.
Okay.
In case of passenger transport, I'm not eligible. More than 13 seating capacity, again I'm eligible. In case of goods, pay 5%, claim input tax credit.
Transport of goods?
Yes, I can claim.
I can claim.
I can claim.
I am eligible.
Yes, we are eligible.
And there are many times the GTA they don't give invoices. Consignment note, based on consignment shall I pay RCM
Based on consignment note?
There are many times the consignment note is different date and invoices may fall in the next succeeding month.
Go with
There are
your,
many times there is a confusion.
Go with consignment notes.
Consignment note.
Go with consignment note. Because you make a provision every month accrual for expenses. So go with the consignment note itself.
One of the GTA, they have charged in the invoice the GST part, but it's not available. That is not reflecting in 2B.
So that's what I was saying. Now who's having the burden to pay?
Recipient.
So if we have to pay and claim the ITC, don't pay to the service provider. If you are very sure your service provider is good, who's come to give a bond that I am going to make good of your taxes, then go ahead and pay it to the service provider.
In some circumstances where the GTA have provided, but it's not reflecting in 2B. Is it voluntarily can I pay RCM?
We can, sir. We
We can. In annual return, can we say that registered dealer, that RCM, that column? But
Yes.
we have not taken any, we have not got any invoices, but it's not reflecting in 2B also.
So whatever case service provider is registered, it comes in sits in 2B. Unregistered, it does not reflect. I only voluntarily add and I pay the tax.
I can make it.
Yes, sir.
Thanks.
Yes.
So cash discount receipt, whether GST is applicable.
Cash discount is a commercial transaction 15 subsection 3. Okay. A discount given in relation to a supply. Like answer to your question is found in 15 subsection 3. There is an agreement at that point in time when the supply was made. As per the agreement, discount may be given upfront called trade discount or may be given subsequently called cash discount. So whenever there is a cash discount given, I can reduce that value from my supply. I can also reduce my output tax. Condition is the buyer should also reverse his input tax credit. So when you say cash discount, I have to examine valuation provisions. If seller has shown in his return as a cash discount and he also reduces his output tax, I will reduce my input tax credit.
He has not shown in his returns.
Then he is not claiming a deduction under 15 subsection 3. I will show that it is a supply, it is a discount in relation to my trade which took place. There was no service rendered by me to the supplier. There is something called incentive discount. We should be very, very clear with respect to incentive, with respect to discount. I like your delivery commission sort of thing when we have this commission agreements. Did I acted as a delivery commission to override the ordinary commission? Did I get a normal cash discount? Did I get an incentive for doing better than what I have to do? So if you can bring the difference between these two, cash discount is purely in relation to my reduction in purchase value. I need not pay any GST on that.
Sir, in case,
TVS Motors, there is one judgment, 2021 Madras High Court, that comes as a handy for your clarification. Yes, sir.
Sir, in case there is a sale which the money is not received, if I charge it as a bad debt, for which GST suffered on sales, is there any chance that I can
Sir, section 34, which talks about credit note. There are 3 conditions when you can issue a credit note. There should be deficiency, they should be written back of the goods, right?
That doesn't take within the prescribed date, and
Then,
after 3 years only we are going to.
Then no mechanism to issue a credit note under Section 34. It's a loss to us. It's a financial loss.
In case of construction contract, the total expenditure, the 80% should be from registered person.
Correct.
In case he is incurred only 70% expenditure, the remaining 30% should continue to live.
10%.
Only 10%.
That's what. End of the year you will calculate and pay on the 10% portion.
Okay, sir.
80% on total purchases.
Total
or
purchases. Total purchases. There is an exclusion. High speed diesel, electricity, no expenses incurred on RCM. Leave all those things.
Only remaining 10%.
Yes.
One more, sir. In case vehicle hiring for the purpose of employee pickup and drop, that time RCM is applicable.
Yes, if it is.
There is an employer and employee relationship.
Huh.
That time
No, can you repeat your question?
the vehicle hire
Huh.
for the pickup and drop
Huh.
employees.
Huh.
The RCM first question is whether RCM is applicable.
Yes, RCM is applicable.
I am unregistered person. Whether
Yes.
RCM is applicable.
Yes.
The second question is the schedule 1, the negative list is coming that employer and employee relationship.
Correct. Schedule 3 is.
Yeah.
Huh.
That time this is come under negative list. Can I need to take a registration?
How is that connected to your first question? See, employee. See, I'll give an example. I'll slightly change this example. Say food catering. I have a canteen where food is supplied at my canteen. Should I need to pay tax and reverse charge if my supplier is not registered? Answer. We will look into 9.3. We will look at that specified list. If it is finding entry, I have to pay. In case of motor vehicle, it is a finding entry, I will pay. Second question. I will recover nominal 10 rupees from my employee. Services rendered by employee to employer covered under schedule number 3. Neither supply of goods nor supply of services. Right? What amount I pay to my service provider? One transaction. Draw a line. 10 rupees I recover from my employee. Second transaction. Right? So first transaction between me as an employer, company, and the service provider. Taxable. Paying. Keep aside. Second transaction. I recover from employee. Say 10 rupees nominal amount, which is forming part of my perquisites. Then no need to charge GST. There's one circular 2022 which has been issued where they say that any amounts recovered from employee in relation to the employment engagement which is forming part of your perquisites, no need to charge GST on it.
But can it be set up with the, suppose in a canteen, if you are charging, providing the food at a concessional rate to the employee,
Yes.
and you are getting the food supplied by the outside.
Yes.
As you said, suppose you are paying 10,000 to the supplier,
Huh.
and you are getting recovered around 5,000 from the employee in regard to that supply.
Okay. Okay.
So that can be set up.
Now, again, I'll split this in this way. First question, can I claim input tax credit? Can I claim input tax? Caterer charge 5% GST. Assuming 1 lakh is the bill amount, 5,000 is the GST charge. First question, as an employer, can I claim input tax credit?
No. You cannot do it.
17.5, there is a block credit. Condition, again, there is one more condition. If it is mandated under any other law for timing in force, factory is license. As per the factory license, I have to provide a canteen facility to my employees, employing more than 200 employees or I can claim the input tax credit. That is a condition which you have to examine. I claim the input tax credit. Second question, I recover nominal amount from the employee. I generally need not charge if it is forming part of perquisite. So it is not forming part of perquisite. Then it is a supply. On that supply, you have to collect your GST. Once I have claimed input tax credit, which is eligible, goes and sits in my credit ledger. Whatever output tax is there, I can set up that credit with my output tax. So, whatever you have recovered from employee, which forms a supply, you charge GST. ITC taken, set off with your output tax. Many advanced rulings are there where ITC on canteen was allowed as ITC because it is mandated as per factors.
But you cannot do the accounting like that. You can.
Very difficult, sir. If you teach to the GST officer, he'll run behind you to get that.
Process will not be possible to generate.
It's like an ocean. Once you pour a bucket of water into the ocean, how do you pick it back? That's the way.
Sir, if it's a work industry and if they provide for employees, so they'll be not procuring from anybody.
Huh.
So, if input is available? Because if they say suppose they are providing for free.
Sir, expenses incurred, whether it is block credit or not, we have to see. 17 subsection 5.
It's about industry, so it's not a.
Correct. But is it mandated under any law? Generally for hotels, no. Like employees, I only provide this accommodation, food and all. It is a block credit for me. It is a block credit for me. Event manager, yes, they can take. Factory, they can take. Employer who is giving to their employees which is not mandated as per law, I cannot claim input tax credit. It's a cost to me. To the extent I charge to my customer, claim input tax credit because it's my outward supply. To the extent which is given to employees as a free element, other than perquisites, then you cannot claim input tax credit. Recover, for not to get blocked the input tax credit, recover some amount or let's say that per meal this is the amount I am going to recover. Like there is something called valuation rules. Employer-employee, it is a related party transaction. Always department will say, I don't agree with your transaction value. Have a third party, security, housekeeping or electric or someone. Charge 10 rupees to employee, charge 10 rupees to housekeeping fellow, security fellow. There your market value is established for that supply. Once the market value is established, transaction value will not be questioned. My cost of preparation is 50 rupees, but I am selling at 10 rupees. There you can say that my market value is 10 rupees because I am recovering from security and other third parties. That comes as a difference for your valuation.
It's for the customers and they will figure it as complimentary.
Claiming, he can claim, sir. He can claim. As good as warranty.
Sir, an individual registered as sole proprietor. Now he is staying in a rented house.
Huh.
Whether he is appear to pay GST on RCM basis.
You are a registered person
Yeah.
and you are staying in a house, residential house.
Yeah.
For residential purpose or for business purpose?
Residential.
No need to pay. No need to pay. Like most of Cs we have, like we operate from residential houses. We take it for residence purpose, we also take it for office purpose. Office purpose, you have to pay tax on reverse charge. Residential purpose, no need to pay tax on reverse charge. That's clear. Circular was also issued by the department where it clearly says this very clearly.
It's an accumulation of great ledger.
Acquisition of?
Accumulation of great ledger. Actually, what happened? The sales belongs to everyone. The sufficient fund is not available. What they did accounting not show the turnover. At the time of August or September, the accumulation of input tax credit.
Circular 133, 2020, there is one circular. It will help you to get a clarity how to club different periods for claiming a refund. That will give it.
I am not asking the refunds. I am asking the applicable interest.
Yeah, applicability of interest. Okay.
Actually, the turnover belongs to April month. The insufficient of fund they show in.
Got it. Got your point. Point in time when you have paid your output tax, that time interest gets into picture. When interest has to be paid, two components will be verified. Cash ledger, credit ledger. Tax paid to credit ledger is ignored. Cash paid to cash ledger will be considered for interest calculation.
Only cash.
Only cash portion. 50 subsection 1 was amended retrospectively, which gives a clarity on this point. Only tax paid in your cash ledger will be taken into consideration.
Even though there is supply belongs
Now,
to
that's the second aspect. When time of supply has to be examined, because your time of supply has been triggered, but you have deferred, then officers will travel back and calculate interest from that point in time. When calculating, I look at credit balance, I also look at cash balance. But very tricky. You are making officers very knowledgeable to examine this. But yes, interest is applicable from that point. I thank Bangalore branch and members all of sitting here to give this opportunity and have this healthy discussion. Thank you.
That was a fantastic 2-hour session on RCM and GST, along with another 20-25 minutes on Q&A. Thank you so much, sir. From constitutional background, law under central and state GST laws, case laws, specifically relating to reverse charge mechanism was covered, along with how department would send show cause notice and how it needs to be addressed and what to be done after receipt of notice, with his practical examples, with his experience in this particular subject. I am sure it has definitely increased the knowledge kitty of members who are present here. A round of applause for that wonderful session, sir. Thank you, CA Gella, Praveen Kumar, sir. We wholeheartedly thank for your deliberation on the subject. On behalf of members present here, without whose support this program wouldn't have happened, and on behalf of members present here and managing committee members of Bangalore branch of SISF-ICI, we would like to hand over a memento to the speaker as a token of gratitude and respect. Now, can I request CA Sunka MG to come out to dais and then hand over memento to the speaker. Thank you, Sumuka. Thank you, sir. Thank you so much once again. With a note of seeking greater support from members present here going forward in future programs of Bangalore branch, I, CA Manjunath M. Hallur, Secretary of Bangalore branch, sign off for the day. Thank you.